You're watching Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. Well, as markets continue to monitor trade tariffs, we explore latest trends in Nigeria's logistics industry and trade routes. And in East Africa, Tanzania completes construction of East Africa's longest bridge, JP Magufuli Bridge. Plus, Bitcoin hits a new high above $110,000. Will it stay there? We'll find out. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the markets that we track now, starting with metals. See, gold prices, they rose to a two-week peak earlier there, but we're seeing a pullback now, 0.30%. For spot gold, still hovering around that over $300 above the $3,000 psychological level. We'll see the same thing for spot. That's U.S. gold futures. That's down 0.30%. So it's right across board with the biggest hit. Palladium, that's taking the biggest hit, 2.62% down, but still maintaining that $1,000 psychological level. We'll see platinum, $1,070. Let's get a quick check on oil now. We're seeing oil prices, they're also pressured earlier after a report that OPEC Plus is discussing a production increase for July, stoking concerns that global supply could exceed demand growth. Basic economics there. Once supply exceeds demand, you see price drop there, 1.77%. That's for Brent, $63.74 a barrel. Bigger drop for WTI crude, 1.80% down, but still holding to that $60 level by about 46 cents. Two other stories now. The fastest growing tech city in 2025, according to Netherlands-based research firm, that's Dealroom.co. They've officially named Lagos as the fastest growing tech ecosystem in the world for 2025. According to its newly released Global Tech Ecosystem Index for 2025. The report highlights Lagos's rapid emergence as a global tech powerhouse, citing its role as home to 5 unicorns and with the likes of Moneypoint and OPay. These billion-dollar companies, combined with a robust startup culture and increasing investor confidence, have made Lagos a top destination for technology-driven enterprises. And World Product Day, Lagos 2025, with a theme, Build Bold, Solve Big, has brought participants who are product professionals, startup founders, scale-up teams, ecosystem enablers, as well as others in the real sector value chain. World Product Day is a global celebration of the product profession and the passionate community that powers it. The day shines a spotlight on the evolution of product management and the impact of our craft. The organizers say this event is dedicated to advancing the culture and craft of product thinking across Africa.
Africa doesn't have an innovation challenge, we have an enablement challenge. So the number is pretty much, from that understanding after years of working in the impact space, after years of being in communities, seeing the problems that they're experiencing, but also seeing how those communities are actually innovating across those problems, and then arriving at that conclusion and saying, actually, enabling that innovation at scale is the issue. So 100,000 product people, that actually is a call to action. It's a challenge to the innovation community to say, how can we all come together to build that inclusive ecosystem to support innovators at the very early stage of their journey? So from identifying that problem to actually then going around to validating the problem and then building solutions for it. So starting from the very basic of what is the problem that I'm solving for and making sure that that ecosystem supports them from that early on. So it's a call to action, it's a challenge, and it really is coming from that place of experience of working in these communities and seeing how they're innovating around the solution, the problems that they experience.
All right, now to our first conversation. As Africa's digital economy accelerates, logistics is emerging as a critical enabler of growth, particularly in high potential markets like Nigeria and Kenya. Sectors undergoing rapid transformation, Driven by a surge in e-commerce, increasing demand for last-mile delivery solutions, and a growing need for sustainable, tech-enabled logistics infrastructure. Well, join us to unpack this. We have Kikelomo Fola-Oguni, as a co-founder at Cargo Plug, joining me right here in the studio. It's great to have you.
Nice to be here, Laddie.
And it's been a while. The last time we had this conversation, I think sometime in 2024. And, I'm always curious, to ask, because I know you play in that whole export, ecosystem and import, too. And I always like to find out what direction, most of the products are going, in Nigeria, and what Nigerian exporters are sending out, at this time. What are you seeing?
Okay, yeah. So largely, the high traffic areas are the UK, the US, and Canada for our business. So we have this whole jackpot syndrome where people are actually moving to these areas. People are sending out food items, hair extensions, clothing items are in really high demand, skincare products. In fact, your what they call Brazilian hair and co, people still order those from here. For some reason, they're sending them out in millions from here.
And production doesn't start here.
It doesn't start here, but I guess it's cheaper here. So they source it from here, and they don't mind paying the delivery fee to their doorsteps wherever they are around the world.
Right. So what are we seeing that's produced here?
Produced here, yeah, skincare. So like your shea butter-based products. Produced here, clothes. Our fashion industry is on a high. We have all these fairs, international fairs in the UK, for example, or in the US, and people are taking African attire from Nigeria, made in Nigeria, to these countries overseas. I think people still have this desire. In fact, non-Nigerians have the desire for Nigerian products. So hair extensions, some of them are made here, or sourced from China, and then fashion items.
So that means, there's hope,
And then food, agriculture.
Food.
Yes.
So there's hope. For that whole, buy Nigeria sentiment, for domestic and also, for people out there.
Yes.
They want to also buy Nigeria. So let's give them stuff.
Yes, exactly.
They can buy.
Quality stuff.
Exactly, quality stuff.
Yeah.
So, talk to me about, the trends, we're seeing in the logistics, business now, because now it seems AI is coming up in everything, and I'm sure that's not left out.
Yeah, of course. So, well, in logistics, we'll have things like real-time tracking, knowing exactly where your package is. When we started our business, this was in 2013, we would hardly know where the goods were. You would just know that, okay, it's coming at some point, somebody will just call you and say your package is here. But now we have real-time tracking. That's from the advent of technology, AI, route optimization. So now when a driver is going out, they're able to tell what's the best way to get to our destination, rather than just go out there and try and figure it out on their own. So that's how AI is obviously coming into buying behavior. So systems are able to predict what you're going to need in a few months, especially for supply chain. You can tell what is running out, what you're going to need, and when you should actually restock your supplies.
And talking about supplies, what about warehousing? Because you need to keep these products somewhere before you actually take them to the consumer. How's that looking?
Well, warehousing is something that we also offer our clients. So whatever you need for as much time or as little time as you need, even for personal effects, not just for businesses. For businesses, of course, but for personal effects, sometimes people relocate from Nigeria and they need to keep their stuff in warehousing because they don't need them over there and they have to move out from their current premises. So warehousing for businesses, for individuals, and it starts from even small scale down to, hectares and hectares of space that are needed for business.
And we can't shy away from e-commerce.
Yes,
at this point, that's projected to grow by about $10 billion. That's in Nigeria, by 2027. So, talk to me about what's driving demand, there, and how the logistics industry is able to maintain the synergy, between e-commerce and most of those customers out there.
I think logistics has played a significant role because people know now that they can, in fact, logistics and payments. There's more, smartphone usage in Nigeria. So people have their phones. You now have everything at the palm of your hands. So someone knows that they can order something, pay reliably, and they won't be, their money will be safe, would actually be transferred to the seller. And then they know that they would have logistics facilitate delivery to their doorsteps. So that has caused a significant boom in e-commerce. Now everybody is selling something. I'm sure everyone has something or someone in their family that sells something on social media. And the world obviously is becoming a smaller place. And logistics is playing a huge role because literally without logistics, the world stops, nothing moves. I wouldn't have been able to get here without logistics. You wouldn't have been able to be on the show without logistics.
Yeah.
So logistics is playing a really pivotal role in e-commerce.
Yeah, so are we seeing any, trends, evolving, in that area when it comes to, e-commerce and logistics? Because I know last time we spoke, we talked about how some of the dispatch riders, they have issues, on the roads, getting the product to, the customer. How's that looking now?
I think one of the coolest things we've seen is people being able to get real-time updates on where their package is in terms of at least even within an hour. So it tells you expect your package within 1 and 2 p.m. and the driver will actually show up at 1 and 2 p.m. That comes from technology, but the thing is obviously we're lacking in some kind of infrastructure because where the roads are bad, it would cause delays. And people don't believe it, but dispatch riders get stuck in traffic. People don't actually believe it.
Even if it's a bike,
because when the roads are too choked or cars are too close to each other, they find it hard to navigate. And that obviously affects the ability to deliver. But yeah, the trends are amazing. People are able to see, even when there's a delay, you can see that, oh, your rider will be delayed by, we have this overseas. But here, it's still, easing into it, but it's definitely coming.
What about stories about dispatch riders saying, they've arrested my bike, or I can't...
That still happens, that happens. And it's just about, it's just going back to business owners being compliant. You have a bike on the road, make sure you have all your required papers, make sure your rider is knowledgeable about the required papers, and he needs to know he has them. Because sometimes they take advantage of those who are not street smart. So the paper is right there, the authority of the authorization they have is right there, but then they just bamboozle them, and once they take your bike, forget about it. With the goods inside, just forget about it. So
with
the goods, yes.
Wow.
So that affects not just the delivery company, but obviously the seller who has made a promise to their clients to expect delivery.
And I know the proximity of Lagos and Ogun State. We've had that issue with the papers. Ogun State paper, Lagos State paper. Have you seen any improvement there?
The thing is, just decide where your coverage area stops. So as a logistics company, set your boundaries. Are you authorized to enter Ogun State? If yes, feel free and have your paperwork. If you're not, then just don't do it. Don't accept deliveries to areas like maybe Ojodu-Bega, places that are on the boundary or on the border. So sometimes you might need to even do something as little as going to take a U-turn somewhere that would mean you're going through Ogun State. So just be mindful. And you also need smart drivers who actually know the geography of Lagos and who know where Lagos is and where Ogun State, where those borderline issues can occur.
Yeah,
not just
smart.
the driver, but even the coordinator, the person coordinating the deliveries from the office needs to know, okay, this address is in Muwe, that's the Ogun State. Let's find a different way of delivering, or you just tell the seller that you're not able to cover those areas. All
right, so we've also seen the emergence of drone technology in some parts, advanced countries. Are we having such conversations here? Maybe I'll see a drone passing by at some point.
For
delivering.
us, not yet, because we can understand the kinds of challenges that would bring. But I know that we have that in Nigeria. We have that. In fact, I know there's a health company that uses drones to deliver blood. So I guess if it's working in that space, it's definitely something that can be adopted in logistics.
Right, and we also have the issue with elevated prices for fuel. Some are still trying to get comfortable, at these price levels. How's that impacting, deliveries, for dispatch? And we're also seeing the CNG, talk of CNG, electric vehicles. How's it balancing out?
It's quite expensive because we've seen, in fact, you see the skits on social media of somebody saying, the price to Abuja is too expensive. Maybe you charge the person 5K, for example. The price to Abuja is too expensive. Please deliver to my friend in Apapa. They're like, to deliver to Apapa is more expensive than to take it to Abuja. So there's something going on, and dispatch riders or delivery companies, some delivery companies, are really taking advantage of it and to their benefits, because at the end of the day, it is coming at a high cost. So as for the CNG conversation, we haven't engaged. We don't use CNG for now. But then I'm sure that as long as you factor in your costs and put a little margin, you can still remain competitive. And that's the better way to go, actually, for sustainability.
Right, and electric vehicles.
Electric vehicles, of course,
All right, so, what are you seeing on the horizon, when it comes to, Nigeria's trade routes? Definitely you did mention UK before now. What are you seeing for the future? At this point, there's so much talk about tariffs, at this point. Everyone's trying to protect or try and get a deal, at this time between obviously U.S. and China.
Yeah.
How's that playing out in the business?
Sorry, could you repeat the last part of the question?
Like, how's that playing out with the business of, logistics, sending some of your goods outside Nigeria? Are you having jitters about, tariffs and all that?
Well, for me, I'm just personally excited about the AFTA because that's something I'm looking forward to. I recently met a founder who set up a business that allows, in fact, she's running like a supermarket, but it's for, you can buy your sugar from, just an example, sugar from Kenya or rice from wherever else, Zambia or so. And then, you're shopping within Africa, and empowering Africa, growing our economy, en masse, and shopping as if you're shopping within Lagos. It's just convenient, it boosts the economy, more jobs. So we're waiting to see how that comes into play in practice. It's one thing to say it's been ratified, but then to see how it actually shows up in practice and see how businesses can benefit from this. And,
right.
Different economies.
Yeah, well, we're still tracking, after, at this
Yeah.
point to see who's actually taking advantage of that block
Yeah.
right now. But I guess it's still early days.
Yeah, it's still early
even
days,
though
but we're
it's
super
been a
excited.
while.
Yeah, it's been a while, yeah.
But, definitely we'll keep tracking that.
keen
Thank
into
you so
that.
much, Kikelomo Fola Oguni, as the co-founder at the Congo Club.
Thank you so
Thank
much.
you for coming
Thank you,
here
Ladi.
today.
Thanks.
All right, the Lagos State government have called for collaboration between the federal and state auditor generals to build a robust accountability ecosystem in Nigeria. The state deputy governor, Kadri Hamzat, made this known at the 54th biannual conference of the body of federal and state auditor generals with the theme Nigerian Accountability Ecosystem. Take a listen.
Lagos State plays host to the 54th biannual conference of the body of federal and state auditor generals, where 32 states is represented at this gathering held at GRA Ikeja. The conversations kick off with a paper presentation on auditing for impact, aligning performance audit with state development priorities.
You can work with a lot of people, so which is why you have the MDAs as well.
For us to have sustainable development, I repeat, our infrastructure to GDP ratio must be nothing less than about 50%.
Lagos State Auditor General speaks on the need to enhance auditing practices for transparency and good governance.
May this conference inspire us to strive for excellence and make a positive impact of our beloved nation.
The federal and state government urge auditors to explore innovative solutions that will transform the profession and align with national development priorities.
I encourage this body to advocate for reform, especially concerning amendment that will strengthen audit independence, ensure timely access to information, and guarantee the full implementation of audit recommendations.
If all the auditors do the needful, probably the effectiveness, the impact of the budget every year in, year out, we will surely see it in our people.
The Deputy Governor of Lagos charged the Auditors General to take the role of auditing most seriously to reduce corruption in the public service.
Collaboration between federal and state auditor general is very essential. Sharing best practices, harmonizing audit standards, and investing in capacity building will enhance our collective ability to detect inefficiencies and promote transparency.
The federal and state governments say they are ready to work together to harmonize audit standards and promote transparency in governance.
Well, on to our next conversation now. Nigeria faces a staggering housing deficit, estimated at over 20 million units, driven by rapid urbanization, population growth, and a lack of affordable housing options. Traditional construction methods, bureaucratic bottlenecks, and rising material costs have made it difficult to bridge this gap through conventional means. However, technology is increasingly being seen as a game changer in addressing Nigeria's housing crisis. Well, joining us now to analyze this is Era Iyayi, is a founder, a CEO of City Living. Joining me right here in the studio. It's great to have you.
Great to be here. Thank you, Ladi, for having me.
Yeah, so I know we've had that issue for a while now, that bridging that housing gap, and we've seen a market where most of the renters are they're basically price takers, at this point, because there's not enough supply. but there's so much demand, for housing, right now. Talk to me about what we're seeing, technology-wise. Is technology able to surmount this huge problem, that we see right now?
Yes, technology can. Yeah, but technology is not going to be a silver bullet.
Right.
But technology can scale. It can catalyze the solution. And every technology is as good as the science backing it up. And that's what we say at City Living, And by science, we mean the understanding of the problem. We believe, and thank God that the conversation is going on around housing crisis, because there have been many solutions before now around home ownership. And for us, we believe that the housing crisis is first a rental housing problem before it is a home ownership problem. Not because home ownership is not part of the problem, but because the numbers say up to 80% of Nigerians in urban cities rent apartments. And if you check the solutions out there, from government, from private individuals, they have been tailored around home ownership and then low-cost housing. Nobody's looking at what we call the missing middle, right? Those who want to rent decent apartments, they want seamless transactions, they do not want middlemen, they do not want hidden charges. Not many people are looking at that, and that is why we are looking at it, right? First is to understand the problem and not to innovate around it, to understand the core problem, and then technology can scale the solution. Again, technology is not a silver bullet, but without technology, you cannot scale the solution.
And we've seen, governments, some state governments, talking about, okay, you know what, especially in Lagos, let's charge monthly rent or, nothing long-term, like that. You don't need that bulk sum. But, there's still that issue of getting the landlords to actually do that.
Yeah.
So what do you think could help, in that situation? Because, definitely it would be nice to see more supply, of housing units. I guess that could be the silver bullet,
yes,
at this point. So how do we get the landlords and the renters to actually, agree to that rule?
First of all, it is a supply problem. And until you solve the supply issue, every other thing will be playing around the edges, right? So, and in a market where there is huge demand, in fact, there was a tweet we have in our office where someone said, the way the crisis is going, and there will be a point, when we get to a point where individuals will get job opportunities in places like Lagos and not be able to take those opportunities because they do not have livable accommodation, right? And we appreciate what the government is doing, and I'm aware that sometime last week or so they inaugurated some apartments as well, right? Those are kind of solutions we must scale. So until we solve the supply issue, we may not be able to do much around monthly payment, rent control, and all that. And let me make this quick point. Perspective will drive outcomes, right? How you see the problem will determine the solution you prefer, right? How you see the problem. So if you see the problem as a pricing-only problem, right? It's a price problem. You want to introduce rent control. If you see it as a pricing problem, you want to introduce fintech solutions, right? But if you see it as an access problem, right? You want to introduce listing platforms, right? So we have seen listing platforms that have done well but have not solved the problem. But if you see it more as a supply problem, right, that whatever we want to do, we need to put more units out there, first of all. Before any conversation can take place, put units out there, right? So until we do that, we may not be solving the real problem. The real problem for us, there are two things. One is the supply, then the management. Because we have seen government and large institutions build units, right? Because of management, they have not been able to do that. And that's why we have applied technology, right? Our platform, if you visit our platform, like we say, we build, we manage, and then renters thrive. Then housing crisis is resolved, right? So once we build, we manage, renters thrive, and when renters thrive, it means that the transaction is seamless. We reduce the number of middlemen and hidden charges, and then the housing crisis will be solved for 80% of urban dwellers.
All right. Another thing, we've seen, some social media influencers, try to compare luxury housing, in Lagos to luxury housing in another, top city in maybe Kenya.
Okay.
And they say the price is cheaper in those sides, and you get real luxury, in those parts. And we've seen the builders talk about, building materials are really expensive at this point. Is technology able to solve that cost, building cost?
Yes. First of all, let me say no two markets are the same. right? And we must appreciate the problem before we prefer solution. I keep saying that the science must back the technology. We must appreciate and understand the problem. No two markets are the same. And we cannot sit down here and agree that greed is not part of the problem. There is greed, right? But when you have such huge demand and limited supply, government alone cannot, no matter how well-meaning the government have been, right, they will not be able to meet the gap, right? And as long as you have that huge demand, you will have human inefficiencies, right? We'll call them greed. So what technology will do and what we do at City Living is to reduce the number of middlemen. I'll tell you a story. There's a property, we leverage joint venture models, right? So with landowners, we approach them, we say, okay, let us help you build high-end rental properties on your land, and then we give you some units, and then we take it. So landowners partner with us. So there was a property we negotiated, we were interested in. Then we got to negotiations, really. Then one of the, what they call the mandates, demanded for a fee, not the agency fee now, demanded for a fee. He called that the premium, 100 million naira, just for introducing us to start a construction project.
He doesn't own the land?
He doesn't own the land.
Okay.
He introduced that 100 million naira. Of course, we can't afford that. Of course, you couldn't do that. So once you have that kind of figure, and they now have another 10%, what is going to happen? The cost already, before you even lay the first block, before you come to construction costs. So what technology like City Living, what we are doing is to cut off those middlemen. We are dealing with landowners directly. We've had a transaction where, when we came to the transaction, the agent was saying that the landowner pulled out from the previous guys we were talking to because he saw the amount they were going to charge for agency fee. Right? So what our technology platform is doing is to direct from builder to renter directly. Then, of course, we're not because we want to take realtors and agents out of the market. Realtors,
because I would say you're taking food out of somebody's mouth.
No, we're not doing that. We're not doing that. Of course, technology will disrupt it. So, but if they come to our platform, so of course they work within certain guidelines, right? Because of course, for renters to rent, agents will introduce them, but those guidelines will be fixed by the platform. Right, that's the City Living platform. For those, because it is a market-driven economy, right? So for those who choose to do business with us, we have set certain principles and guidelines and saying that we understand what the problem is, we are leveraging technology, and we are leveraging partnerships to solve this problem. But by dealing directly, right, we will reduce the inadequacies and inefficiencies that middlemen and bottlenecks that we have seen.
And also take food out of some people's mouth. But yeah,
we are not doing that. We are not doing that because if you go to our platform right now, City Living will not thrive without realtors, will not thrive without agents, right? So agents are a key part of our ecosystem. They're a key part of those we partner with. We say we thrive with partnership. In fact, I was supposed to attend the Nigerian Institute of Asset Surveyors and Valuers that just ended. And in fact, there is even a FIAPC event that's coming up that we'll also be part of. You understand? So we understand that it is partnership that will drive the solution, not playing around the edges.
And hopefully
so we're not taking food out of agents.
And hopefully those agents that charge 10,000 naira.
But if you're a greedy agent for inspection, but if you're a greedy agent, you do not have a place in the future we are creating.
All right, so what are you saying, going forward, when it comes to, housing in Africa and countries like Nigeria, where we see such, big deficits?
We see solutions, different types of solutions. And those solutions will be driven again by the understanding of the problem. If you think it is an affordability problem, you will want to offer financing.
I'm sorry, especially with, we did get the last rate setting meeting. It was a hold, but, private sector is saying the interest rates are still very, very high. In Nigeria, you can't really do business with that and make a profit.
We cannot deny the fact that interest rates can be better. Everybody wants that, right? Again, hopefully we saw the CBN governor talk about it. So there's stability, there's confidence, and that confidence is bringing investments. And once you have those investments, these things begin to stabilize. So we can continue to pray and support that they achieve the goals they've set for themselves. But beyond that, right, people are building. There's capital funding, what we call luxury apartments that are empty. What platform like City Living is saying to do, we are trying to do, not even trying, what we are doing is to say, okay, so this capital that you have deployed, right, you can deploy it into what we call a $20 billion rental market, right, that can deliver returns to you today, deliver cash flow, and of course, there's a tangible asset that we appreciate over time. I had a conversation with someone yesterday, and I told her clearly, if you missed New York 50 years ago, and you missed Dubai 20 years ago, you shouldn't miss Lagos, right? Nigeria will get better, Nigeria will urbanize, and Lagos will lead that transformation. And with City Living, you will be having a tangible asset.
It's so interesting because when you see the prices of properties in Lagos now, properties that used to command maybe 100 million, you're seeing 1 billion now for that kind of property.
It is a supply problem.
Yeah,
supply problem. Once you deal with the supply, face mask. There was a time people were pricing face masks out of reach. But today, if you don't have face mask, if you offer that, you understand. So once we deal with the supply, once we deal with the supply, and platforms like City Living and other platforms, right? Once we deal with the supply, then we would, our management, then of course we'll be solving the problem.
All right, we'll keep tracking progress there. Thank you so much. It was great having you. Ira Yayi is the founder and CEO at City Living. Thank you for coming on.
Thank you so much, Ladi.
All right, we'll take a break now. We'll see what's happening with the markets. Willie Bong has that in a moment. Just stay with us. All right, let's go straight to the markets now. Willie Bong has the details of what's playing out with those markets that we track right here. How's it looking?
What would I say? It's comme ci comme ça.
Comme ci comme ça.
Would say, like the French would say, you know, the market is a little bit wobbly. You know, at intraday, Nigeria is still bouncing off that negative close we saw yesterday, and still at intraday, it's not doing so well. I thought people would just hop on the dividend payments they're receiving and say, oh, let me reinvest it.
Right. I guess they're looking for some kind of confidence, you know, at this point.
At this point. Well, let's just check out major stock markets we track in Africa. And as I mentioned, it is looking red at intraday. Nigeria's NGX was down at intraday by 0.17%. The GSE in South Africa, looking at it, trading low as well, 0.68%. So Africa is not doing so great. Elsewhere, Egypt's EGX was trading up at 0.47%. That's the outlier for the markets we track. And also, the Nairobi Stock Exchange closed Wednesday session in positive territory. Let's look at it very quickly. 0.25%. That's a turnaround from the negative close they had at intraday. We'll see that positive close for the market, as I'm sure they'll probably close still in the green. Now, the chairman of First Holdco PLC, Femi Otedola, has credited President Bola Tinubu's economic reforms and the credibility of Central Bank of Nigeria's policy under Governor Yemi Cardoso as the key reasons behind his 320 billion naira personal investment in First Bank. Mr. Otedola made the remarks at the 13th annual general meeting of First Holdco PLC taking place today, where he reaffirmed his commitment to repositioning Nigeria's oldest bank into a dominant player across Africa's financial landscape. And the share price of First Holdco rose by about 10 kobo following the news. Great one for investors, that's what they were looking at. But now, away from equities for a moment, let's turn our attention to the fixed income market. On Wednesday, that's yesterday, Treasury bills auctions took place where about 500 billion naira was on offer. And joining us to break it down is Caleb Alimi, Chief Dealer, Providence Bank. Good afternoon, Caleb. It's good to have you on the show.
Good afternoon, Will. Thank you for having me.
I see you're sounding chirpy, so I believe the markets are looking good. Now, the T-bills auction was held yesterday, saw a total allotment of 638 billion naira when the DMO had offered about 500 billion naira. Could you break it down for us? What went down there yesterday?
Oh, interesting. The DMO, like you mentioned, offered about 500 billion, but we saw, appetites of over 1 trillion, especially on the long end of the paper, on the 1 year paper. There's a lot to unpack in that 1 year maturity. Why? Because there's also, comparable OMO auctions to the DMO auctions. What we find that the CBN does with the open market operation bills is to sort of regulate liquidity. And for that reason, those ones are slightly, they're significantly higher than what the DMO is actually offering. We have the 1 year paper. We saw it drop from the last stop rate of 19.63 to 19.56. Now, volume sold was also much better than the last auction. But the 91 day and the 182 days, remained stable at 18 and 18.5 respectively. We think that what we see is that the DMO continues to show appetite for not increasing interest rates. They want to borrow, but they want to borrow cheaply.
Okay, but speaking of borrowing cheaply and the yields and stop rate, you know that the 1 year paper, as I saw in the news, that the 1 year paper is expected to have a yield of about 26%. Is that true? And is it now walking head to head with the current interest rate, which is about 27.5% right now?
Yes, what has happened is that the DMO continues to sort of like track inflation, and they don't want to go significantly above that inflation figure, right? And the yield on this one is around, just a minute, the yield on this one is around, it's around 24% actually. It's around 24%, so it's just a bit around inflation, and that's where they want to keep it.
Okay, so do we see higher yields in the near term? Because last time when it was held, this is the second consecutive time the CBN has held rates, but we saw after the first hold, interest rates are still going up. Do you still see the CBN? You mentioned that they're trying to borrow cheaply. Do you still see the CBN, the DMO, hiking rates just to get foreign investors to come buy into the markets?
The CBN may hike rates on its open market operations, but the DMO will not hike rates on the Nigerian Treasury bills, which is largely their own borrowing platform. So we don't expect DMO to raise rates. I think they're going to maintain 19.56. They've tried to keep it below 19.6 for about 4 auctions now, and I think it's going to remain at that handle.
Okay, so what the post MPC now, let's talk about that. What has been the reactions of investors or market players after the hold rate? Was it, it was in line with expectations, but what did you see in the market after the decision of the central bank?
So it's been absolutely, like you said, it was absolutely in line with the market expectation. So the reaction hasn't been too significant on the treasury bill space. But what we've seen is on the bond market space. You know, there's a bond auction next week on Monday, and there's a bit of anticipation that the hold is being interpreted as a dovish central bank. And then we're seeing a bit of demand coming to that bond space at the long end of the curve, the 50, the 2050 maturity, the 2049 maturity, the 2033 maturity, the 2035 maturity. We're seeing, investors come demand that because that hold sort of like was interpreted as a dovish language, so to say.
Thank you so much, Caleb Alimi, Chief Dealer of Providence Banks. Always good to have you.
Thank you, Will.
So let's look at sentiments in the Middle East. They were mixed at intraday. Dubai was up 0.13%. However, Abu Dhabi was down 0.15%. Still within the region, Saudi and Qatari indexes were trading in opposite directions. Saudi was down 0.63%. Qatari index was up 0.02%. That's a marginal uptick though. But let's shift now to the US and see where stock futures were mostly flat on Thursday after Wall Street's big sell-off over worries a new US budget bill could sharply increase government debt. On Wednesday, the Dow dropped we see today dropping 0.07%, and today the futures also up. S&P futures up 0.08%, and the Nasdaq all slightly up 0.16%. And the 30-year yield hit 5.09%, and that's its highest since October 2023, with a 10-year at 4.59, and both eased slightly today. The budget bill is expected to pass the House. Is stoking inflation fears and they're tied to growing deficit. Investors are also awaiting weekly jobless claims for labor markets clues. Now let's look at Asia very quickly. It fell on Thursday to close following Wall Street's losses as investor sentiment soared over fears that a new U.S. budget could significantly add to the country's, borrowing debt. Let's look at Nikkei, down 0.84%. Kospi also down. It's red for that region, 1.22%. The Hang Seng in China is also down 0.82%. Let's look at Shanghai in mainland China is down 0.22%, and the Nifty 50 in India also down 0.82%. So much sentiment around the U.S. budget and how much it can add, the impact it will have on their economy, and you see the Asian markets reacting very sharply to that, laddie. So it's just red, and that speaks a lot about how much investors that are, investing in Asia are tied as well to Wall Street.
Yeah, it's quite interesting. I did see a headline sometime where China was advising the U.S. to be responsible, when it comes to, their money at this time, and the debt issue. All over the world, at this point, everyone's dealing with
you see debt
ballooning
debt.
At this point, and it's interesting your conversation with Caleb earlier. Once central bankers make the decision, investors want to know what the direction is. Mm-hmm. Is it hawkish? Is it dovish? He's calling it dovish. Or was it dovish? I guess we'll find out.
More like a dove, bro.
Hawkish, dovish. All right, thank you so much, Will, for giving us the details there. But let's over to Europe now and check on markets there. Lars Holter is with DW and joins me from Berlin. Great to have you, Lars. So what are investors looking at today?
Yeah, hi Ladi, how you doing? There was a lot of red already on your board here, I saw, and if we're looking at Europe, I can only tell you we got to add a little bit more of that color. We have the FTSE 100 down a little more than 1% right now, the CAC 40 over in Paris as well, and also the DAX. All the major indices here in Europe down, but they're all trading in really thin air. As a matter of fact, it's astounding to see how little volume there is in trading in Frankfurt today. Then again, of course, it's not a huge surprise because, like I've pointed out before, we're seeing record highs in a market that pretty much everyone says has decoupled from economic realities. So I think people at this point are just not sure what to do anymore. Pump even more money into the market, or is it about time to take some profit off the table?
Yeah, I guess that's the conundrum there for most of the investors. Take profit or put more money in. But let's have a look at one of the stocks that are not doing well. We see German flag carrier Lufthansa. They're talking about restructuring parts of the company. What's going on there?
Yeah, it's true. Lufthansa shares were at over 10 euros 3 years ago, and now they're at 6 euros and 70 cents. So they lost more than a third of their value. Revenue and profits are down for the past quarter. As a matter of fact, the company's namesake Lufthansa brand, which is a bit of a premium brand in the higher price sector amongst the airlines, they've seen a loss last year of almost 100 million euros. And then you have the brands Austrian, Swiss, Brussels, and Eurowings. They're doing a bit better. But it's a bleak picture all around. And mind you, all that while the company was actually growing, it has now 14 airlines flying under its banner. And while that is not a unique feature, of course, in a business that has seen a lot of consolidation over the past couple of decades, it is unusual that all this consolidation, all the mergers, the takeovers, they have actually led to the company not improving their margins, not getting any stronger in terms of the balance sheet.
So what's behind this trend? Why are the numbers, so bad?
Well, Ladi, it's likely because the integration of the different airlines hasn't worked the way management had once planned. And that is what investors had long been saying. They have pressured Lufthansa management to improve the integration there. And they've now had some success. The company is working on what they call Matrix Next Level. Now, what a name. I guess really the process itself comes out half as good as this futuristic Hollywood-sounding catchphrase. They might really be up to something here. Anyway, Ladi, the general idea is to give all these 14 airlines in the family a shared system to cut down on overhead, finally. They are talking about one IT, for an IT and software architecture that combines all the brands. Then they want to have one admin, to have a common administrative system for all airlines. And finally, there is one excellence, as they call it, which is technically the one system that people will notice most. It is the corporate architecture used to secure and improve the quality of the flights and the service there. In the past, there were lots of problems navigating between the systems, and that is now supposed to end.
Right, I guess since we're talking about the Matrix too, maybe they'll ask if you want the blue pill or the red pill, at some point. But in all of this, is this all happening, behind the scenes, or will customers notice any other changes?
Well, Ladi, apparently they will notice some of the changes. Lufthansa says that about half of all connecting passengers stay with the network. Say they're connecting from one Lufthansa brand to another Lufthansa brand to reach their destination. And with a better integrated IT system, that would go smoother. Which, sometimes it's the little things. It could go as far as making sure that a special meal order is connected to both bookings when connecting to another flight, and not just the first initial booking. Now, will this make such a huge difference to the company as to attract more passengers and really change the bottom line? That is, of course, hard to say, as is whether or not Lufthansa will be able to improve its relatively meager profit margin of just over 4% right now. But, they're trying on the ground too, by the way, with more generous lounge access for passengers flying within the group. So all in all, it seems that Germany's flag carrier is working on becoming more attractive for passengers, but also especially for investors.
All right, we'll keep tracking that company. Thank you so much, Lasso, bringing us the details from Europe.
Yeah, thank you, Ladi.
All right, to East Africa now. We see Tanzania has officially completed the construction of the JP Magufuli Bridge, marking a significant milestone in the nation's infrastructure development, spanning 3.2 kilometers across Lake Victoria, Gulf of Mwanza. This bridge is now the longest in East Africa and Central Africa. The project, which commenced in December 2019, was funded entirely through domestic resources, amounting to over 700 billion Tanzanian shillings, approximately $300 million. Named in honor of the late President John Pombe Magufuli, the bridge connects the Kingongo and Bushiji areas, significantly reducing travel time from over 30 minutes by ferry to just 4 minutes by car. And our source now, we see the African Export-Import Bank, that's the FREXIM. They've pledged a substantial $1 billion investment in Tanzania over the next 12 months, focusing on key sectors such as infrastructure, local manufacturing, ports, energy, small and medium-sized enterprises, and regional integration. This commitment was announced during the FREXIM Bank Tanzania Roadshow 2025 in Dar es Salaam under the theme Innovative Financing Solutions for Tanzania's Sustainable Growth. The event, held in collaboration with the Bank of Tanzania, showcased financial instruments designed to support the country's third five-year development plan and Vision 2025. All right, let's head to the commodities market now. Let's see which prices are affordable or not at this point. Chicken remains a staple in Nigerian households, valued for its affordability, high protein content, and role in traditional cuisine. But despite the popularity, we've seen prices rise about over 10% in the past 6 months. And domestic production, that's still not meeting about 30% of national demand. Let's talk to Ajibola Ayodeji now, the analyst, financial derivatives company. Great to have you on the show. What's driving the recent increase in these poultry prices? And why does demand remain strong despite the hike?
Thank you very much. Thanks for having me. So you all know that chicken is one of the most consumed poultry products in Nigeria. We are seeing a 10% increase in the price of chicken. Why? One of the factors that's contributed to the increase in the price of chicken recently is the increase in the price of feed, like poultry feed. So we saw that the price of poultry feed has increased by over 100% now. Over the last 1 year, it has increased by over 100%. And one of the major components of poultry feed is maize, or maize, soybeans, and others. So we have seen that. We have seen like a 92% in the price of maize. In 2024, it increased by 92%. The price of maize increased by 92% in 2024, and this has contributed to the increase in the price of feed. And when there is increase in the price of poultry feed, it will reflect on the price of chicken. That's one. Two, we are seeing that farmers, small and medium scale farmers, they are shutting down due to the increase in the cost of production of chicken, and this has reduced the supply. And when the supply tightens, then there will be increase in the price of chicken. These are the things that have contributed to the increase in the price of chicken, among other things. And also, however, we are seeing the demand stay elevated. Why? Because we saw that there's a consumer preference We saw that people are more concerned about the health benefits of chicken, which is a white meat, they rather go for white meat than red meat, which is chicken and other white meat. So that has made the demand to stay elevated. Another thing, because of the health consciousness of people recently, another thing is that it is the price of other substitutes like meat, like beef meat and fish has also increased. So chicken remain easily accessible and versatile option for household in Nigeria because of the health benefits.
Right, and we're also seeing the price of eggs also high at this point, and that's supposed to be a cheaper protein. So still high prices as usual. Thank you so much. It was great having you, Ajibola Ayodeji, an analyst with Financial Derivatives Company. Thank you for coming on today.
Thanks for having me. Thank you.
All right, let's get a check on prices of other asset classes now. Let's look at what's playing out in the crypto market. Last time I saw green on the screen with most of the coins having that rally that normally comes with Bitcoin, rallying at this point. We're seeing over 110,000 But $111,000, that's never been seen. That's for the price of Bitcoin. And it started, the previous high, that was about $109,000, but that has been broken at this point. But will it remain around those levels? We'll definitely, find out. But let's see what the headlines are right there in the market. We see a New York federal jury, the founder, Braden John Caroni, the former CEO of SafeMoon, is found guilty on all counts in a criminal case tied to the major crypto fraud scheme. The charges included conspiracy to commit securities fraud, wire fraud, and money laundering there. So that's SafeMoon. It was supposed to be a safe way to the moon, but I guess that did not work out. So he's about to get about 45 years for that. Then we're also seeing there, Binance, they've announced the listing of USD One, a stable coin that's linked to World Liberty Financial. That's another project linked to President Trump. And it's a spot trading platform there, trading for the USD1 USDT pair. That's scheduled to kick off at some point today. Then we see the National Bank of Kazakhstan is set to formalize the legal operation of cryptocurrency exchange points with oversight and licensing responsibilities assigned to the central bank. I will see the director there of the central bank also explaining how these entities are going to get regulated. So I guess they're approved, at this point, once they're able to be regulated by the central bank right there in Kazakhstan. All right, let's head to the charts. Let's see what's next for Bitcoin at this point after hitting a new high, $111,000, 461, up 4.44%. We're seeing other altcoins, they're not left out. Ethereum is also holding up $2,654, but is it performing as much as Bitcoin? Not really. Let's bring in Sunil Dixit now. He's with SK Charting. Hello, Sunil.
Hi, Larry.
Yeah, it's good to have you, Sunil. So we know when markets get so bullish at this point, we know traders that like to either go long or go short on some of these asset classes. They try to make that decision. So Bitcoin has broken past that 109,000 level. We spoke yesterday. You said it was going to fall like a hot potato if it didn't cross that 109,000 level, but now it has crossed it. What are you seeing?
See, as we had discussed earlier, 109.5 was a turning point for further bullish rally, and it really cleared that hurdle, and we see the new high, 111,800. Going from here, that 109.5 turns into support, immediate support, as we say, and if that support is broken on the downside, the next supports come for 108 and 106.
All right, so
and as long as 110K support acts as strong, the rally further can extend to, let's say, 113K in the near term, and if the bullish momentum continues by next Saturday or Monday, I see prices rallying further to 120K.
All right. So according to Sunil there, he's seeing $120,000 Bitcoin if this continues. But we'll definitely keep tracking that. But thank you so much, Sunil Dixit, there for showing us those price levels to actually watch with this latest rally with Bitcoin. Thank you, Sunil Dixit.
Most welcome, Larry.
All right, there you have it. Sunil has charted the course there for Bitcoin. He's saying if it stays above 110,000 to 111,000, then we might see another push up to maybe about 120,000. But this market is so unpredictable, and maybe that might not happen, or maybe we might see Bitcoin actually drop more. But that's how most markets we track are looking today. Thank you so much for following us on this journey in most of these markets. We'll join you again tomorrow. We'll have John McCraw with details on Business Incorporated to tell you how markets are looking. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.